Hey there, everybody. It's Greg Gossett from Gossett Trading and Mentoring Live. Boy, what a day today. Today is Tuesday, May 7th, 2019, and we are in the last hour of the market. The last hour is my favorite time to trade because I feel that is the best confirmation of price where the market closes, rather than intraday where there can be a lot of noise and so forth. So, boy, what a day. Currently, the Dow is down 554 points, the Nasdaq's down 190 points, and the S&P is down 57 points. So, very tough day. I think it's probably the second or worst day of 2019. So, what we're going to do today is the format for today is, first of all, I'm going to have to run the U.S. required government disclosure. Then after that, we're going to take a look at my current positions, where we got in, why we got in, and how we're going to handle the positions going forward. Then we're going to take a look at my watch list today, and we're going to go through each stock in my watch list, and we're going to take a look and see if there's anything setting up for the end of the day. And then after that, after the market closes, I'm very happy to answer any questions that you have. So, okay, first off, let's run the U.S. government required disclosure, and it's about 40 seconds, and I will be right back after that. So hold tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, we are done with that. Thanks for holding with me through that. So, boy, what a day. We've got a lot of geopolitical things going on. The trade war fears have been ignited again. We've got carrier groups going, making a presence near Iran. So yeah, just a lot of unfriendly stock market situations. So let's take a look. Let's take a look at the indexes before we get moving. But you can see yesterday we had this huge reversal. Gave everyone a lot of hope, kept everyone in their positions, including myself. And then today just gapped lower, and it's pretty much been a one-way trip on the downside so far. So, that's part of trading. It's unfortunate, but you try to make the glass half full and look at these days and try to learn something from them. If you're going to lose money on a day like today, you might as well try to take something positive away. And I think the positive thought that you should remind yourself is that anything can happen. Position size correctly. Take small position sizes, 5%, 10% position sizes. Don't ever have more than 60% total of position sizes of all of the stocks that you own in your portfolio. When the stock market's going up, you wish you had a bigger position, but when it goes down like this, it's nice not to have a full position and have all your money at risk, because trading is a risky business, folks. And the way to make money in trading is you have to keep your losses small and let your winners run. And this is a very dangerous situation right here. The Dow, sliced right through its 50-day moving average. Did not hold support there. That is certainly not a positive sign. So we'll see what happens. If the Dow closes back above the 50 again, I might consider getting back in the Dow. We're just going to have to see. But after this session's activity, I most likely will be flat. We have the trade delegation from China coming in on Friday, and I think the market is, pricing in the worst case scenario. Who knows? It might rally after that, or it might continue down. So, let's everybody be careful out there and position size correctly. And when your stops get hit, just go ahead and take them. The Tues, same thing. We had that rally yesterday and the reversal. Next line of resistance, level of resistance on the Tues, probably down here. It's probably down here. And with the lack of anything coming out from Washington, there's a good chance we could go down there if we have a vacuum of news before Friday. So this is not good. It lost the channel. It does have the second ATR channel down here, but right down here is probably where I would be looking to buy the Tues on a dip. That's on another chart. Sorry. Okay, the SPY. Same thing. Maybe we'll find some support down here at the 50. But what concerned me about this going up is that we made a high, we had a little pullback, we made a higher high, and we had this major divergence. To see how high the bars are here and how low they are here, that's a divergence. And a divergence doesn't really mean anything until it confirms, and until it goes down, until it matters to the market, it doesn't really mean anything. Well, now it has confirmed, certainly. Let's take a look at IWM. IWM, again, big down day. It might catch some support at the 50 or the 100. Not sure, but we'll take a look and we'll see what happens at the close. So, all right, let's go to my positions, which are pretty ugly today, but that's part of it, right? So we got in here back on May 1st when we rejected the third ATR channel and closed above it. We also rejected the new low when we went down here into this new range, and we closed back above it. It did move up our way for a few days. We took a couple profit targets, but my stop loss is going to be a close back in this range, and looks like it's going to do that, and so I'm going to have to get out. This is a good time to explain. I have two types of stops. I have an end of day stop, and then I have an emergency stop. And I bought here. My stop was a close below here. That is my end of day stop. But this down here is my emergency stop. I like to do all of my trades based upon the closing price. But if it gets 5% away from my entry, regardless if it's not the end of the day or not, I have to just go ahead and pull the trigger. Because if you're waiting for it to, well, I can't get out because it hasn't closed yet and it's down 10%, you have to limit yourself. So you have to have two stops. You have to have your end of day stop, which is hopefully very close to where you bought it, so you can take a small loss. But then you have to have an emergency stop also if the price action during the day, intraday, is so bad that at some point you have to take the loss and not wait for the end of the day. So, I take 10% position sizes, and my emergency stop is a 5%. So if this were to hit, I would actually lose 0.5% of my trading capital because I'm taking a 10% position size, and if I lose 5% on that, that's going to equal a 0.5 total capital loss. So if I have 6 positions, then the worst loss I should have in a day is 3% if all of them hit my emergency stop, right? So 0.5% times 6 positions, if they all hit that, then that would be a maximum 3% loss. That's my maximum loss that I'm allowing on any one day. I mean, we're nowhere close to this right now, luckily, and I will get out because it is closing below my intraday stop. But you always have to have an emergency stop that if it gets down there, you take it intraday, because you have to have some kind of protection or some level Because what about if it went 20% down? You know, you wouldn't want to say, well, hey, I couldn't get out. I had to wait till the end of the day. So, you know, two stops, the end of day stop and a emergency intraday stop, which I put 5% from my entry. You can see here, from here to there, you know, just about 5%. So if this were to have gone down there at any point during the day, I would not wait till the end of the day. I would just immediately get out. So with Amgen, unless we have some miracle rally close back above this line, I will be getting out. Goldman Sachs, boy, this is a real bummer. I mean, this is probably some of the worst part of trading. I mean, when you know, we entered here when we closed back above this 200 with this higher low in place, using the 100-day as my stop. Well, yesterday, you know, went all the way down and then just had enough to close above the 200 to keep me in. You know, very frustrating, but you know, you have to follow the rules. You never know what's going to happen, but you have to follow the rules, have a process. You know, even if your gut's telling you this or that, just go with your plan. You know, my plan was keep it as long as it's above the 200-day, and it closed just a couple pennies or 5 cents or whatever it was above the 200-day. Unfortunately, obviously it would have been great if we would have gotten out right here. If it would have closed just barely under, I would have gotten out, but it kept me in for this. So I will be getting out unless we have a miracle and it closes back above the 200-day. So the 200-day was my end of day stop, and the right down here, the 197.40 is my emergency intraday 5% stop. So I hope that makes sense. So we will be getting out of Goldman Sachs under the 200-day. IBB I took yesterday. Sure looked like a great trade. We broke over this range. RSI was above 50. We had some good volume on the upside. Unfortunately, just immediate reversal. And my initial stop was the 100-day moving average. And so obviously looks like I'm going to be getting out of that. This down here again is my intraday emergency stop, and that's 5% from my entry. So anyway, it'd be nice if we have a little bit of a rally into the close. I highly doubt we're going to keep any positions, but it would be, you know, nice to turn a 10-yard loss into a 7-yard loss or a 6-yard loss, right? So we'll see what happens. But if this had got down here today, I would have just had to take it regardless of the time. All right, Intel. So I bought Intel back on the 3rd of May when we closed below the 100-day and then closed back above. We also went from under 30 to over 30 on the RSI. So 2 good signals, 3 good signals actually. Under 30, back over 30, close back over the 100-day, and a V2, which means day 2 goes lower than day 1, day 3 closes higher than day 1. So my initial stop, I wanted to keep it close, is the 100-day moving average. So if we close under the red line here today, which is 50.85, I will be getting out, barring some kind of big reversal at the end of the day where we close above. This line here, the 49.21, that is my emergency stop. That's 5% from my entry. So if it would have got down here at any point today, I would have just gone ahead and taken it. And you know, maybe it would have got down here, you would have sold it, and then it would have rallied all the way back up. And it's just too bad. That is part of trading. You know, when you own a business, you know, you have cost of goods, right? I mean, you sell things, but the things that you sell cost money, and so that's your cost of goods. And in the trading business, your cost of goods are your losses. And just like in a regular business, you want to keep the cost of what you buy, you know, of your inventory, your products, you want to keep them as low as possible. And it's no different in trading. You want to keep your losses as low as possible. So, you know, maybe that will help you put it into context, but, you know, trading is a business. You want to keep the cost of your products as low as possible, and your losses are your cost of goods. So, you know, keep them low. You don't have any control over it. in the big picture, other than how many shares you buy, but you do have a lot of control over where you get out and if you get out. And these kind of markets right here, it's about psychology. It's about not losing more money, getting impatient, getting frustrated, thinking it can't go any lower, and loading up the boat. It's just not a good policy. It just gets you off track. It's a rocky road. So have your plan. I'm going to take a 5% position size or a 10% position size. Write down where you're going to get out. If it closes under that level, just go ahead and get out. Even if every part of your body, every fiber in your body is screaming, no, I think this is the bottom. Well, we go back to the last quarter of 2018, and let's take a look here. Say we got in there and got out here. Doesn't feel good, right? This could be the bottom. This could be the bottom. It keeps on going. It keeps on going. You would have been so happy to said, I got out here, right? Instead of riding this all back down. Because at some point you just think, oh, it can't go down any further. And then it just often does. So, if we had gotten in here and out here, yeah, it would have sucked for sure. Would not been fun. But after a couple of days of it continuing to go down, you're going to feel a lot better about it. So, yeah, psychology is an important part, especially these kind of trading days. Okay, so let's get on to Merck. I did buy Merck here when after earnings. We bounced from the 200-day moving average. We got up here. This is just about the place that I would be thinking that I would want to get out of this trade because people that bought here most likely are looking to sell here, and that might drive the price back down. But we had a bit of new information come in, which was earnings, and it went down initially and then rocketed back up, and that's where I entered. I did phase out of 2 profit targets up here, about 25% of the trade. And once you get into a trade and it starts moving your way, then you have to decide where is my trailing stop going to be. Well, my trailing stop today that I decided yesterday was the 20-day moving average. If we close below this 20-day moving average like it is right here, I'm just going to have to go ahead and get out. And of course, this line here is my intraday emergency stop. That's 5% from my entry. So if it gets down there today, even if it's not the end of the day, I'm just going to have to take that. And let's hope it doesn't get down there. But my trailing stop on this today will be a close below the 20-day moving average. Okay, so SPY. Oh, let me move this over here. All right. So I mention this every day, but for new viewers and if they haven't seen this, I just explain it quickly. But I do a trade every night at the end of the day. It's my overnight S&P approach, and it's based upon this study. Since 1993, if you would have bought the S&P on the open and sold on the close each day, so you bought it in the morning, sold it in the afternoon, you would have actually returned a negative 5.2%. Since 1983, can you imagine? But if you did the opposite and bought on the close and sold on the open, so you buy it in the afternoon, you sell the next morning, the return would have been 568%, meaning more than all performance came in after hours trading. So since 1993, all the performance in the S&P has come from overnight in after hours trading. And you can see the red line is the buy in the morning, sell in the afternoon. The green line is the buy in the afternoon, sell in the morning. Now, this is not, since 1993, it's done very, very well, right? Undeniable that it has had a good return, but there are drawdowns, significant drawdowns, 30% drawdowns, 40% drawdowns. So, you always have to be careful with your position size. So, Yesterday was a big down day. I bought, I mean, just to go back a few days, I bought here, sold here for a nice profit, but the next day, bought here, opened way down here, took the full loss, then it rallied. So that was the biggest loss of since I've been using this. And then today or yesterday, I bought at the close again, and again it opened down, but at least I got out here, not down here. So, any good trading methodology is going to have strings of losses. Just because something loses money for a week doesn't mean it's not a good long-term system. And on the flip side, if you have a bad system and it makes money 2 or 3 days in a row, it doesn't mean it's a good system. So, anyway, I had 2 big losses from there to there, and from there to there. I will be buying it again at the end of the day with my 10% position size. The most important part of trading is staying in the game to be able to trade. And the way you stay in the game is you position size correctly so that if you have loss or a big day, it doesn't really damage your account. You'll never get good at trading if you put tons of money in, lose it all. You're never going to have the ability to get the experience to become a good trader. And to get experience, you have to stay in the game. And to stay in the game, you have to have small losses so you still have money to trade. So, all right. So I will be buying this again at the end of the day. Okay, XLE. Bought this back on the 3rd of May. When we closed below the 100 and then closed back above the 100. It also was at the 30 RSI and then closed back above the 30 RSI. My initial stop on this is a close below this 100-day moving average. And, as of right now, looks like we're going to get stopped out. You never know. This is my emergency exit down here. So intraday, if it got down here, regardless that it was not the last, at the end of the trading day, I would get out. So who knows? Maybe we can hold back above there. If we hold back above there and it holds, I will hold the position. If not, I will get out. And for me to get back in, I'll have to have another close back above. But the key is to keep these losses small. And then when you do have a winner, to have the patience to let that run. Oh boy, XLE. I bought this back on May 3rd when we closed above the 200-day moving average. I closed below the 200 would be my initial stop. Yesterday we opened down below the 200 by a significant amount and then rallied back above and actually did at least hit one profit target yesterday, which, be grateful for small things that we did take some of this position off before this happened. So I will be getting out of here today if we have a close under the 200. And again, this line down here is a 5% for my entry. That's my emergency stop intraday if it hits that. So let's take a look real quick, see what the market. So the Dow's down 564. NASDAQ's down 193 and the S&P's down 59. So yeah, it is ugly out there, folks. It is ugly out there. So to me, it looks like we're going to be getting out of all of our positions, or all of my positions today, and then just take a wait and see approach. But, in these markets, capital preservation is more important. And I know it's tempting to go, I can't go any lower. I'll just load up here. But, once you make that decision that this is it can't go any lower, and you make a big bet on a position, if it goes up, you're super happy. But if it goes down, what are you going to do? You've already made the decision it can't go any lower. So, if it keeps going lower, you can't really justify to yourself that, I'm going to get out now. If you've already made that decision that something is the bottom, you just never know when the bottom is, folks. You really, really don't. And it's frustrating when it goes back the next day and you don't have it. I completely understand. I've been doing this for 23 years. I've been through that a million times, but you get through it and you learn from the experience. So, okay. Hey, David Gordon Russell, thanks for showing up. Appreciate it. Hi, Frederick. How you doing, buddy? We got Johnny Norsworthy. Thanks for coming by. Here's Dr. Jorgensen. The market is ugly. Reminds me of my old girlfriends. Yes, there you go. Well, this is an ugly girlfriend or ugly boyfriend day for sure. Look at yesterday, big reversal. We should send a bill to Trumpy for our losses. There will be some good buys soon. We'll make our small losses back. Be ready with your funds. Yep, that's right. That is right, everybody. It's the right way to look at it. You got to play the long game here, not just day to day. You have to play the long game. And I know it's tough. That's why so few people make a living trading, because it is tough. But it's simple, but it's not. It's easy, but it's not simple. The easy part is, hey, if it goes below this line, get out. That's easy. But you're battling with your emotions and your ego and your opinions. That's what messes it up. It's human error. I think if you wrote down all your rules and you gave it to a 12-year-old kid and said, here, trade these, he had, no skin in the game, and he just mechanically traded what you gave him, he'd probably outperform 90% of the traders out there. He would probably outperform you 90% of the time, because he would follow the rules. And it's so hard to follow the rules. I totally get it. But let's be smart. Let's be better than that. And let's follow the rules. Okay. Let's get back to our charts and take a look. All right. Apple. Well, big down day today, down $6.90. Big day, down 3%, 3.3%. So, it may catch some support at the 50 RSI here. I don't know. I sure would like to be able to buy some Apple down here in this range with the third ATR channel, the 50-day moving average, and the 100 or the 200-day moving average down in here. If we get down in here, I will definitely be looking to buy. But right at where it is right now, the only thing it has going for it is the 50 RSI and possibly this low right here. But people have a lot of stops here, and if we go down and trigger those stops, I'm pretty sure we're going to have a big washout down here. And then if it reverses, that might be interesting. But as it is right now, I'm certainly not interested in Apple. Amgen, I already have that. We just talked about that. Amazon, big down day today. Just want to point out, this used to be resistance here. Then we finally broke above that resistance. That resistance here now becomes support. Now we broke the support, going back up to the resistance. See how yesterday we got back right to the resistance and failed, and then bump, rolled over. So where would I be interested in buying Amazon? If we move sideways, we had a stab down and reverse, a V1, V2 entry. That might be interesting. And if you got really lucky, you get it back down here near the 50-day moving average. It's not out of the realm of possibilities, folks. So we'll just have to wait and see. Boeing, boy, look at that, down 4%. Did not hold the 200-day. That is certainly not positive. It is holding the 32 RSI. These trade wars have a large effect on Boeing. So where would I be interested in Boeing? If we got down under a 30 RSI and then closed back above a 30 RSI, I may have an interest there, and or it closed back above the 200-day. But for this to slice down through the 200-day like this, that's concerning, because there's generally a lot of buyers at the 200-day. But if those buyers can't prop it up and it can just slice down through there like that, that is not a good sign. Just want to point out that this 200 did act as support, and if we go back up to it, it is going to act as resistance. So, all right, Alibaba. Well, look at that. Lost the 50 RSI, also lost the 50-day moving average. This is all not positive. Um, Probably the next line of support will probably be down here at the third ATR channel. Um, at the very least, to get interested in Alibaba for me, I'd have to close back above the 50-day moving average or see some kind of price action that started to calm down a little bit, went down and reversed back up. Caterpillar, same as Boeing, closed below the 200-day. Where would I be interested in Caterpillar? Possibly if we close back above the 200-day again, giving me a good risk to reward ratio. Canopy Growth down 3.41% today. We had this nice up move. Boy, it's down 3.3%. Doesn't look like it on the chart, does it? But it's holding. It's definitely holding up better than a lot of the market. So, if we had a close below 50, close back above 50 with the V1, V2, I might be interested in Canopy there. Cisco, lost the 200 again. I'm sorry, lost the 50-day moving average. It did bounce there, but it didn't close. I really like when it closes below the 50 and then back over the 50. And this one just bounced at the 50. So where would I be interested in Cisco? A close above the 50 might be interesting, or in a 30 RSI range, possibly down in here, and we may get it. The Dow looks like it's closing at the lows, or it's at the lows currently. Dexcom is moving sidewards. eBay, it's holding pretty good since the gap up, moving sidewards. I would really like to see this just drip down a little bit, close below the 50 and then back above. That might be a good entry point. Etsy, lost all of its moving averages, lost the 50 RSI over here. So nothing interesting on Etsy. Okay. Facebook, big down day today, about 3%. We'll see if it comes back into value, which is in the +1 and -1 ATR channels. So we'll see. Five Below, big down day, 4% today. I would be looking possibly down in this range for an entry or a strong move back up. Swiss franc is down today, not doing much there. General Electric did close above the 200-day. I didn't like it because it had this downward sloping 200-day, and now we're back down below. So, where would be an entry on General Electric? It would have to close back above the 200-day moving average to the upside, and to the downside, probably, maybe down in this area around the 100-day moving average. All right, gold. Well, gold's up today a little bit, not a ton. I will be buying gold when the 5-day EMA, which is this turquoise line, closes above the 20-day moving average. That is a back-tested approach that over time has certainly made money. Doesn't mean it's going to in the future, but the past results have been pretty good. So I will be taking a 10% position size if the 5-day crosses back over the 20-day. Google having a tough day as well, down 2%. I really think a good buy on Google is if we could close below the 200, back above the 200, giving us a good risk to reward ratio. So I'll definitely will be watching this one very close, but we're not there yet. Goldman Sachs we're going to be exiting that at the end of the day. HCA, close back above the 200 would be interesting for me. IBB looks like it's closing at the low. We bought this yesterday. So I will be closing, I will be getting out of this under the 100-day moving average. Intel continuing to go down. We'll be getting out of this under the close underneath the 100-day moving average, or an intraday stop here at 49.21. The Russell, big down day. You know, a close back underneath the 200-day and close back above would be interesting there, but that's about it right now. Johnson & Johnson moving down. You know, possibly a bounce, close below the 50 and close back above might be interesting on Johnson & Johnson. Coca-Cola. Everything's down today. Where are we at right now? Yeah, we're over 600 on the Dow. Unbelievable. Unbelievable. But yeah, on Coca-Cola, you know, coming back, it is back down in value. That is positive at the very least. I'd like to see it move sideways, have a stab down, reverse V1 or V2 entry to the upside. Lockheed Martin. You know, it's kind of holding this gap up range, which is positive. It's not, it seems like it's relative strength. It's doing better than the rest of the market. MasterCard. You know, we had that big reversal yesterday, and currently right now we're closing below, or we're at below halfway of this large bar. We'll have to see where this closes. It's a potential if it closes up here in the upper half of this large bar, if it was able to hold support. 3M, you know, it gapped and just kept on going. It's at a 19 RSI. It's horrible. Altria. Well, you know, we came down here, made this lower low. We rejected the 200-day. A lot of people that bought here sold here. That's what had an effect on the price going back down. But now, if it can move back up over the 200-day moving average, keeping this higher low in place, I would definitely be looking to buy Altria above the 200-day moving average. This is one I've been watching for a while. Merck, we have Merck. We bought it here. Close under the 20-day moving average. I will definitely be getting out of that today. Microsoft, big day down, 3% down. It is back in the value zone, which is positive. So we're gonna have to, we're just gonna have to have it settle down, go sideways, possibly stab down, reverse to let us know that there are no more sellers willing to sell down in this area. Right now, we don't know that. You know, it could go down here tomorrow. We want to see some actual price action of the price going down and reversing back up to give us a better confirmation of getting in the trade. So we shall see, but nothing right now on Microsoft. On Netflix, big down day today. We'll see if the 50-day moving average holds. A close below the 50 and a close back up might be interesting, but yeah, it's a pretty nasty day on Netflix as well. Nike, boy, just really got hammered. Really got hammered. You know, we got in here when we broke above this fractal, which is two lower highs to the left, two lower highs to the right, moved right on up here. It did get above the 70 during the day and then closed below, and that's where we got out, thankfully, right? So we didn't have to endure all this. You know, it's interesting. We're at a 33 RSI and we are at the 100-day moving average, although we are underneath the 100-day moving average. If this moves up tomorrow or in the days to come, this would be a good setup because we're in the low RSIs. You know, there tends to be support at the 30, 33 level. That's where people come in and start to buy. And at the same time, we have the 100-day moving average below us as well. So, you know, those are two different indications that we may have some kind of temporary low in. But we shall see. I'm actually going to mark Nike for the end of the day. Philip Morris. Yeah, if we move up, we could possibly be working on a higher low here, but that's only if it moves up. Right now, it's not a higher low because it has not confirmed and gone back up. Well, PayPal is back into value. But everything is down here today, folks. But in the bigger picture, we are back into the value zone. Anything above here is above value. Anything below this green line down here is below value. So we are back into kind of a neutral, decent area. We just need, we're in this zone now. Now we need some kind of price action to show us that it's moving back up. So nothing on PayPal. Tues, we talked about that. We could go down to there. I don't know for sure, but that would not be a bad place to buy because it would give you a very good risk to reward ratio. Back up if the market can move back up, or a very small loss if it closes below the 50. But I need to get it closer into this area before I would be interested. Silver's down today, which is surprising. I would expect silver would have been up a little bit today on this type of day, but it is not. Gold was up a little bit. So, all right, what else we have? SPY. Boy, we could be heading to that 50-day moving average. I will be buying this at the end of the day for the overnight S&P trade. Did buy that here. Sold it first thing in the morning, luckily, right? So we'll be buying it lower. I'll be buying it lower today at the end of the close, or near the close. Square, it's a 3692 RSI. In order for me to get interested in Square, at the very, very least, I would have to have it close below the 30 RSI, the downside, and then back up, or above the 200. Actually, that would be my plan for Square. Either a close back up above, or a close underneath the 30 RSI, close back over, or a 520 EMA cross. That back tests well on Square. So those would be the options on Square. 30 RSI down in this area to the downside, a 5 crossing the 20 to the upside, or a nice strong clean close above the 200-day moving average. Take a look here. AT&T does look a little interesting in the fact that we did go below the 200, and now it's possible that we may close back above it. Ideally, I would rather have it close below the 200 and then back over. But I think I am going to wait for that. But if it did close above the 50-day to the upside, I would also buy that. But if we go down tomorrow and then back above the 200, I would be interested in that. Or if it doesn't go down below and then it closes back above the 50, I would be interested there as well. But it does have this higher low in place currently, at least. So if we, people that bought here, when it got up into this range, that's generally where people sell because they're just doing a counter trend trade, and that tends to put supply into the market, which drives the price down. But if it's strong enough to hold here today and then move up, that would be a good sign. Let's take a look at this intraday. These are 39-minute bars. Yeah, I mean, it's kind of gone down and just gone sideways the whole day, hasn't it? 30.35 is the 200-day. Well, I'm just gonna wait and see what happens tomorrow on that one. TLT bonds, boy, up big. Up big. People are getting out of risk assets, and they're going to risk off assets like bonds. Tesla, pretty down day today, pretty big down day today. Wouldn't be interested in here. Although if tomorrow, you see how we possibly are forming a higher low. I mean, if we went up tomorrow, it would confirm that higher low. And if we went up tomorrow and closed above, this is this close here, we would have a V2. Because remember, how a V2 has 3 bars involved. Day 1, day 2, day 3. Day 3 hasn't happened yet. But here's day 2 taking out the bottom of day 1, which is positive. Not positive, but it would be positive if it came back up, showing that there were no more sellers under here. And you see how we're closing below the -1 ATR channel? If we could get a V1 entry to the upside tomorrow that rejects the 1 ATR channel to the downside and forms a V2 to the upside, that would be interesting to me. But right now, no. Same thing. Here's natural gas. We have this, we make this low, we rally, we come back down here. This is day 1, day 2, day 3. Day 2 washes out day 1, but this day would have to close above day 1's close, and it's not there yet. So it's not a confirmed V2. If it did, that would be interesting to buy, but it doesn't look like it's going to do that. UNH, it's not bad. It's not bad, really. We had this big bar up here that triggered this fractal. Actually, that one's really not too bad, and it's holding up better than the market at the moment. So let me run some numbers on that. I really didn't think I would be buying anything today, but there is a chance. All right, we're going to mark that one as well. Oil closed below the 200-day moving average. It closed back above, might give us a good risk to reward ratio, but we'll have to see. The dollar's just moving sideways. Visa had that big rally, but like everything else is back down today. Verizon, I do like AT&T better, just because AT&T is at that 200-day moving average. I like it better than Verizon. Verizon is still only at the 100-day. Energy Select, we're going to get out of that underneath the 100-day moving average. XLP, back into value, but we need some kind of V1, V2 trigger to get us back long. Real estate really went down today. At the very least on real estate, we'd have to have a close back above the 50-day moving average. XLV we have, and we're going to have to get out with a close under the 200. And transportation, well, it did reject the 200-day, which is somewhat positive. But with that large bar, I would have to have a close below and a close back above. All right. Okay, so quickly, let's look at our possibilities today. So it's possible that I would buy MasterCard. Let's see. $148 times 1.6. 236. Nike. Probably not. And UNH. Probably not after rejecting the 50-day. So MasterCard looks okay. And why? Because we had this big strong rally here yesterday. It has been able to hold the halfway mark of this bar almost. Well, let's see. So 243.85. So if MasterCard does close above 243.85, which is holding the 20-day moving average and also the 50 RSI, that would be my entry. But if we close underneath the 20-day moving average, if we close underneath 243.85, I would not buy. So that is my plan. So really only looks like MasterCard is a possibility. Okay, so what we have to do, we have to go through. I'm gonna have a lot of orders here at the end of the day because of all these stops. But it looks like Amgen definitely will be taking a loss and getting out of that position. It certainly looks like Goldman Sachs will be getting out of that position. IBB, most certainly we're going to be getting out of that position. Unless Intel closes above the 100-day moving average here, I will be getting out of that as well. But we talked about that 10-yard loss turning into a 6-yard loss or 7-yard loss. Luckily, we have had that. You see, we're off the lows on about everything. Now, just because it's off the lows doesn't mean we're going to keep it, but at least it does help us make a little bit of the loss back today. Come on, Intel, get up there. Wouldn't that be amazing if we could get back above there? Merck looks like it's going to close under the 20-day moving average. SPY, I'm going to be buying that at the end of the day. Boy, XLE is making an attempted rally. If it closed back over the 100-day moving average, I would actually keep it. Wouldn't that be something? It's out at 63.79. Have to cast off losers, get ready for the new crop. That's right. We have a lot of weeds in our garden today, Bruce. A lot of weeds, and we need to keep that garden weed free. So we got to get out the stock roundup and get them out of there today. So we have 9 minutes. Let's take a look. Where are we at? So the Dow's now only down 536. So that's good. We've made about $100 back. Not $100, 100 points on the Dow back. Tell you, it's tough to take these losses. I mean, it's always tougher to actually lock them in, right? Because when you still have the position, you still have some kind of hope, but you don't want to buy in hope, right? You got to have the plan, but it is tough. It is tough to take your losses, but if you want to stay in this game, get good at it, have a career in it, you have to do it no matter how bad it feels. All right. Are any of these possibly even close for us to keep them? Even a possibility. Intel maybe, but it'd have to go up 50 cents. That's asking a lot. XLE is close. XLE could really do it. 63.79. Yeah. And XLV, definitely not. All right. And then let's look at MasterCard. Yeah, I'm going to have so many things to do here. I'm probably going to just have to start taking care of a little business right now. Let me look and see what MasterCard looks like intraday. Yeah, that's good actually right there. All right, I am going to, just because of time, well, I'll give it a couple more minutes. Before I make the decision. Yeah, let's take a look at Twitter. Yeah, well, that's a tough day on Twitter for sure. You know, it's a big bar, larger than 2 ATRs. It's lost the 10-day moving average. The plus side to this, David, is that it is back in the value zone between the 1 ATR channel and the negative 1 ATR channel. So that, that is somewhat positive. Not that it's gone down there, but if you look at this trade anew, it is getting into an area that's pretty good. The weekly, very likely we could come back down and test that halfway mark. If I was looking to get into Twitter, I would need to close below the 20-day, which is the blue line, and a close back above. That is how I would approach Twitter. Okay. All right. I'm going to go ahead. I'm going to buy my MasterCard position right here. Let's take a look at that one more time. It's holding the 56 RSI. Yep. All right. Oops. All right.
Order partially filled. Order filled.
I trade several accounts, so I have to do this multiple times. You're going to hear my little English guy speak a lot, letting me know.
Order partially filled.
All right, so MasterCard is taken care of. Anything else? Amgen, definitely not. Goldman Sachs, definitely not. So I've got to get rid of Goldman Sachs.
Order filled.
IBB, nope.
Order partially filled.
Intel.
Order filled.
Probably not, but we'll see. Merck does not look likely.
Order partially filled.
XLE.
Order filled.
We'll hold off on that one. XLV, no.
Order partially filled. Order filled.
Gonna have to get rid of Intel.
Order partially filled.
All right.
Order filled.
And XLE. All right. What do I have? 3 minutes. All right. Sorry. Let me just take care of all this and then I'll get back. Yeah, Intel is trying hard, isn't it? All right.
Order partially filled.
And
Order filled.
IBB over here.
Order partially filled. Order filled.
Okay. Boy, that's gonna be a tough one on XLE. Are we out of everything else? Oh, Amgen. Yeah.
Order partially filled.
And I
Order
bought the SPY, so we're really down to XLE. Boy, it's close. I'll have to get it chambered up here to see. We'll just wait to the very, very end on that one. Okay, what do we have? We have about 30 seconds. 63.80. Boy, it's going to be close, huh? It's hard to say. Well, I only have 10 seconds. I'm going to just
Order partially
go
filled.
ahead and sell it.
Order filled. Order partially filled. Order cancelled. Order filled.
Okay, that's the market. Well, I guess that was the right move. It was 63.79 and actually closed at 63.75. Holy smokes, that was a lot of trades. That was a lot of trades.
Order cancelled.
This might be a good time. Commissions are a huge part of how you're going to do in trading. And, I like to phase out of my orders. But I trade more often. So it's important that you have a broker where you have low commission costs, because it really adds up. It can add up to 20-25% of all your profits during a year. So, like me, because I phase out and I'm active trader, it's really important to have a low cost broker. I use interactive brokers. On average, it's about $1 a trade. Schwab's $3.94, $4.95, $3.95, $4.95. For the same thing with interactive, it's 4 times less. So Schwab's great. I've used them for years, but I really do like interactive brokers because of the low cost and lots of features. And also, I believe they pay 1.9% interest on the money that's not being used. So anyway, not a formal plug for them. I'm just telling you it's important, and that's who I use. So all right. You're keeping XLE, David? Well, good. I hope it goes up tomorrow. I hope it goes up. Where did Intel end up here? Yeah, it didn't quite do it, did it? Well, that was a tough day. I think that was my biggest down day of the year, which is difficult, but again, it's just part of trading and you got to just let it go. Hey, before we get into any question and answers, I do want to let you know that I offer private one-on-one coaching via Skype during the nighttime. So if that's of interest to you and you think that might be helpful, my hourly rate and my contact information is in the description of this site. And also, if you felt like you learned something today and it was helpful, do me a favor and hit the thumbs up button. It does help with YouTube as far as our us showing up and building the channel. So if you could just hit the like button and or subscribe and or share it with your friends, I would really appreciate it. So anyway, does anyone have any questions today or thoughts on the market? I'd love to hear them. All right. Doesn't look like we have any. So yeah, tough day, everybody, and hopefully better things to come. Let's just kind of think that our best trades are in front of us. Oh, Frederick, what type of orders you make at the end of the day? Market order, limit order, stop loss order. When I buy at the end of the day, Frederick, I generally just use a market order because I'm trading large cap stocks, so the bid ask spread is not going to be very large. But when I do enter a position and then I put my profit targets above me, like here's Amgen, right? Last night I put in my profit targets above me, and of course those are day orders, but they're limit orders. Sell this many shares here, sell this many shares here, sell this many shares here. So when I put in my profit targets, they're always limit orders, but when I do my trading at the end of the day, they're market orders, and it's because they're large cap stocks and the bid ask spread is very small. Does that make sense, Frederick? Hey, you're welcome, David. I appreciate you coming by today. So anyway, hope everyone can come by tomorrow. We'll see what happens. It could be an interesting week. I would not be, or an interesting day. I would not be surprised if it went rallying up strong, or if it went if it went down again. I have no idea what's going to happen, and none of us do. So all we can do is do our best, position size correctly, follow our rules. So anyway, I hope everybody can check in tomorrow, And I hope you enjoy the rest of the day on the way out here. Oh, yep, Frederick, another question. Do you emergency stop as a trailing stop? Yes. Well, it's not quite a trailing stop. Trailing stop is more when the price is moving my way and I'm trying to tighten up to lock in my profit. An emergency stop is the stop below in the worst case scenario if you're not waiting until the end of the day. And maybe what you're asking there is, do I actually put a stop loss in, like a standing stop loss? And I don't. Because I watch it during the day. I have limit orders to the upside that are actually in the system, but because I'm generally 5% away as my emergency stop, I just watch that, and I would do that manually. I don't have the stop in the system to the downside and the limits to the upside, just the limits to the upside, and then I watch this to the downside. Does that make sense, Frederick? Okay, David. Hope to see you next Tuesday. All right. And if you guys have any other questions, you think about later, you're welcome to email me them. I'll do my best to get back with you if you email me as well. All right. So, Frederick, any other questions, or did I answer that okay? All right. I'm going to take that as a yes. All right, everybody. On the way out, we got to do the legal disclaimer. And thanks again for coming by today, and hopefully see you tomorrow during the last hour of the market. Have a good day, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.